yeah, so you definitely want to know what the candles sticks mean and why they move the way they do, because if you can understand why your price moves the way that it does, then you can absolutely make money and be profitable and hopefully make this a lifestyle and not kill yourself anymore with with strenuous work. So I want to get right into understanding these and what they mean. So for whatever reason, these are called candlesticks. I'm not sure why in the financial world this is called candlesticks, and honestly, it doesn't matter. Let's just be honest. But price movement is contained within these candles. You will always have two different colors because two different colors represent two different directions. The green is showing you that the candle is going upward, meaning the price on the side here is going up. The black or the dark gray candles are the price going down. So means price starts up, but it goes down. Now this chart is great because right now we're not in the live market, so you're not seeing, usually there's a timer here that shows how price is moving each second or each minute, depending on the settings that you put up here. Just to do a quick, walkthrough of what we're looking at here, you're able to put the symbols of the instruments, and I'm calling them instruments. So your NASDAQ, your gold, your silver, your whatever that you want to trade goes here. You can create and name it whatever you want. You can drop down and is that adding a new layout? You can't. Oh, here we go. Add the plus sign, and you can choose from all different instruments that you want to trade to add into your list. But we only focus on just the ES and NQ. So the others, for the purposes of this little course or boot camp, doesn't matter. You have that same instrument that you're trading with the name will pop up here in the corner as well. Then you have the times of which you want to set your candles. So every single candle or every single stick represents a time period. So it's either, each stick is either 1 minute long, 2 minute long, 3 minutes long, 5, 10, what have you. For me right now, these candles are 5 minute long. If I go to 1 hour, they'll look a little bit different. But note that every single candle, each one is 1 hour long. So it took 60 minutes for this price to go up and down, up and down, up and down, up and down, until it finally settled and closed down here, all in 60 minutes. Then it went to the next candle, up and down for 60 minutes until it finally closed here and went down to the next one, up and down for 60 minutes, so on and so forth. So that's that. And then down here just shows you if you want to see if what you're looking at is a day's worth, a month's worth, 6 months worth, a year worth, what have you. I barely even pay attention to that. I focus more on these. And then you have your instruments here that help you mark on the chart. You can draw, a trend line. You can do whatever. Pretty simple stuff, because this is your work board. This is what you use to work to figure out what your price is doing, so you know what you want to do. So that allows you to enter in your trade and enter out of your trade. Super simple. Super, super simple. So now that you understand that, let's explain how a candle actually moves, because that'll make things make some sense as well. Especially since this is not a live chart. It may not be clear what I mean when I say the candle moves up and down. Let's just analyze a regular candle. And I'm not going to draw this. People always draw this, and I think it looks wild, so I'm not drawing this. We have this gray candle. This gray candle moves up and down for 60 minutes before it closes here. Every candle moves the same way, in that if you are a dark candle going down, this is called bearish candle. When you open up your trading view for the first time, it'll be red. I change mine to this color because this is the color that I prefer. You can change your colors however way you want by actually double clicking, going to settings, and you can go down to is it the canvas, the background? You can change the background to what you want it to be. The symbol is how you can change all of your stuff here. And this is what I do. So this candle is a bearish candle because of the color. Bearish means down. Word candle. Bearish means price is going down. Bearish means selling. So selling, bearish, puts, down, red, all mean the same thing. So for us, this is selling because we're in the futures market. So every time we see a bearish candle, it will typically open up at top. It will bounce around. This little wick that you see here, this wick, this little stick here, the top of it is the highest that price was, which was 6,861. When I look over here, this is the highest price was ever at in those 60 minutes. This is the lowest price was ever at within those 60 minutes. This is where it initially opened, and this is where it finally closed, right at 60 minutes. And then what happened? It opened up right next to each other, bounced around, highest points, lowest points, bounced around for 60 minutes, and came to the middle and settled, and on and on. Now, it did the same thing on this candle, where it opened up here, highest price here, lowest price here, bounced around, and price closed here, and then opened low, just right next to it, opened, price went up, it went up to this little wick here, got as low as this, bounced around, and closed here. So you'll notice a bearish candle, meaning a candle that's going down, opens at the top, closes at the bottom. A greenish or a bullish candle going up opens at the bottom, closes at the top, which makes sense, right? It's going up, so it needs to fill up. This is going down, so it needs to fill down. And that's how price moves. I'm not sure that price movement is imperative. I think what's imperative or what's important is what the candles represent. And again, this is kind of a simple course, so I'm definitely not spending detailed amount of time explaining every single thing. I will make subsequent videos on each area, so there's more detail to it, but this is more of a cursory view of the market if you just want to know sort of quickly what you're looking at. The candles tell a story. The candles tell you where price has been, where price is going, where price wants to go, all those things. The higher you look at a candle, instead of looking at it on the 5 minute, the 3 minute, the 2 minute, and when you look at it on the 1 hour, the 4 hour, the weekly, the monthly, you have this broader vision of what the market has done. So remember, each candle represents the time that I stamped it at. So I put it for monthly. So every single candle, no matter how skinny, no matter the color, it matters not. Each single candle represents a month. And you can see since 1997, September 1997, all the way to December 25, we have, what has the market done? The market has basically gone up. It went up this way, dipped down here, went up this way, dipped down here, and has kind of steadily been on this incline, been climbing up for the whole past month. This lets me know what the market has done for, 30 years or so. This is per month. This is cool. I drop down to the weekly, and I see similarly the candles show that for weeks, for years, in weak language, the market has been in this upward trend. If I drop down to the days, and you can see an up down trend. Overall, the market is up, but it's still going to go up, down, up, down, up, down, up, down, up, down, up, down. That's what we call market structure. When you notice that price does not move in a linear That's the wrong one. It doesn't move in a straight line like that. It actually moves like that. Everywhere that you'll see it. Price has a mentality of yin for yang. For every yin, there's a yang. For every yin, there's a yang. For every up, there's a down. For every good thing that happens to you, there's a bad that happens. Because it's the way the market recalibrates. You can't have your life be one straight line, always. No. Your life must always, some great times, maybe some not so great times, some great times, but not so great times, because the market moves in a staggered direction. Similarly, it moves the same way downward. I'm not great with this. So the market can move up and it can move down. The beauty with futures is understanding that you make money whether the market goes down, whether it's losing money, or whether the market is moving up. So like even here, when you see this, you can imagine most people would say, ooh, I hope whoever was in this trade got out here, because boy, well, maybe they got out here, but they could have turned around and taken a trade to say, I see it going downward, let me ride the wave down, and still made money. Your goal is not to change the direction of the market, because we don't control it. Your goal is to catch the wave and flow with it. Whether it's for 5 minutes, whether it's for 5 months, it's whatever you want to do. But you have to understand what you're looking at in order to understand where the wave is and to catch it. And so this is how the market moves. It moves staggered. It's not a straight line. And which to me I love, because I like the idea of knowing that it gives me time to catch up. Because if the market was like this, a straight line, there's no space for you to get in, right? It's a straight line. It's flat. There's no seats here. Like I don't see any opening when it's this straight. But here, this is a terrible drawing. I'm gonna redraw it to make sure this looks better, I guess. Okay, so if the price is going down, let's say I realize it here, like, oh man, I've already looked over here and the price is going down. In this price moving up, you have this opportunity, if all your confluences make sense, for you to catch it up here and still ride the wave down. Versus here, where do you want to catch? There's nothing. I don't know if that even makes sense, but I felt like that made sense in my head. Your goal is not to change the market. Your goal is to understand where it's going so that you know where to catch it. And that's simply the market. There's nothing else to it. So when you understand how to do this and how to get into a strategy, then you can understand how to get into top step, select something, whether it's 50,000, 100,000, or the 150,000. I'd always suggest starting with this, because your profit target is 3,000 versus as you get higher, your profit target goes up, and it kind of freaks you out when you're like, you have to make 6,000 or 9,000. 3,000 is definitely super obtainable again in the futures market, because the futures market moves pretty aggressively, for lack of better terms. So the next thing I want to kind of do is go over candles and their interpretation. As I said just a little while ago, the candles tell a story. They're not just like price shifting up and down and doing whatever it wants to do. Absolutely not. The candles tell a story. And if the reasoning as to why it moves the way it moves is not being answered right now, it'll be answered later on as price action does what it needs to do and all those things. So a good trader looks at the overall market in the morning when they come in and they sit down with their coffee or their tea and they're ready to enter into a trade. They look to see what happened the night before, they look to see what's happening today, and then they look to see what's been happening overall to get an idea of what the market is trying to do, because your goal is to understand what's the market trying to do, what has it done before, what is it doing now, where does it want to go. So as you and I looked at it from the month, this market's been going up. She's been going up since 1997. She's had her dips here and there, but overall, we're good. We're green. We go down to our weekly because you want to do what people call a top-down analysis. Sometimes you want to go from your month to your week to your day to your hour to see what the market's been doing this whole time. And when I go down to the week, I see that the market is still moving in this upward trajectory. When I go down to the daily, I see that she's still moving up, but maybe here we've slowed down a little bit. I look down on the 4-hour. Okay, here's where the upflow that I was seeing so easily has now become questionable. Like, we were up over here, then we kind of dropped tremendously, then we picked ourselves back up, but then we started going back down, and now we're going back up, and it's kind of stagnant or consolidating at this point. Like, something's been going on over here that's causing some consolidation. Maybe something happened down here. So you see all these things. It's important to look at it and go, okay, this is what the market's doing. It's not coincidental. When I see these kind of large candles, either something newsworthy took place to make such a drastic shift here, or when I see these candles, I remember that, hey, it's December, so market's not going to move as amazingly as we would want it to because it's the Ember months, it's holiday period, people are either not in the office as much or what have you, so things don't move as beautifully as they should. And then when I see this other big candle here, I go, yeah, something must have been said regarding finance, like either there were no more jobs or something, and that's what caused this huge, why did the price drop down so fast and so low? Look at that, it went from 6,782 to 6,005. It moved down 300 handles almost. That's a lot. It's a huge move. Why did it do that? So you want to understand things like that and realize that the market moves a certain way for a certain reason. So understanding that each candle means something. When I'm looking at the chart, this is how I go in to every day. I go in, first of all, looking at the daily. I look to see the daily candle that has been formed for today. I look to see where it opened and where it closed. So I see that the candle opened up here. After this candle closed here, it opened just above, if not right next to it, and it closed above this previous candle. This closing above the previous candle lets me know that we are bullish, we are green, that the market is telling me it wants to keep going up. And that's what it's saying to me, which is great. Now I go down to the 1 hour, and I'm gonna mark all my opening periods. So like all of my, actually I like to do on a 30-minute. I mark all my 9:30 a.m. because 9:30 a.m. is when New York market opens, and that's the time period that I trade, 9:30 a.m. So I'm just gonna mark a couple out. 9:30. Great. Now, I've said futures is awesome because you trade pretty much 24/7, pretty much, okay? And there are times where between 4 and 5 or 4 and 5:30, there's an hour's break, and where the market is closed for that hour, and then it reopens up again around 5:30 or 6 or something p.m. But for the most part, you're trading 23 hours a day. The 9:30 I've marked out as New York time. But before the previous New York time and today's New York time, the market is still moving. You can see candles being formed in between. So even if this time right here is, let's say it's 1600, let's say the market is closed over here at 1600, which it typically does, and then opens here, what happened here? Well, again, like I said, the market is open 24/7, and if you trade futures, you can actually trade in the market. So here we have the Asian market and we have the London markets, and so I like to mark those off too when I trade. So Asian markets, I mark it off at 1800. That's how I've usually marked it. I know Asian markets start at 2000, but I mark it off at 18. And I'm going to remove this. And then London markets, I mark it off at 3. a.m. Okay, sometimes depending on your time zone or where you live, it might be different. So 9:30 yesterday, 1800 yesterday, 3 a.m. this morning, 9:30, which is when the bell rings. And what I do is I take my horizontal ray and I mark my low point, my lowest point where I saw price, the lowest point where I saw price reach to, which would be here, because I'm looking within this window. This whole window here shows me price, shows me price action for Asian session, and I see that the price has been here. My lowest price has been this point here, and my highest price has technically been here. There's a reason why I mark it this way. I don't really look at price on these lines, because this is the interchange between the previous session and the new session. I want to know at the core of the session, where was price. Also, so that's how I'm going to leave that. And then I do look at the previous day. So this was 9:30. Let's see where the highest price was for that previous day. And I'm going to change the color. And previous day here. So during the New York market for yesterday, the highest price that price was at was here. The lowest price was down here. For Asian market overnight, the highest price was here. The lowest price was here. This is now the London session. The London session lowest price was somewhere here. And I'll change the color. And the highest price was somewhere here. Cool. So, and then I like to do one more marking where I mark the pre-market. So again, you have New York, you have Asian, you have London, you have pre-market, which is just an hour before the main market opens up. And so I mark these candles, and basically I look to see what the sentiment for the overnight was, because I know what happened during the day yesterday. Price went up here, then it kind of teetered down here and ended up somewhere down here. And then Asian market came up and kind of consolidated, which is kind of what it does, until London market came, and whatever the highest point of Asian market was, the London market took that out. It basically said, I'm going to have a higher point than Asian market. And I know that key levels are they're like magnets. These are called key levels. When I notice the highest points in the session, in this Asian session, this is the lowest point, this is the highest point. These are like magnets. Price is going to constantly want to be drawn back to these lines because they mean something. They mean that price was at its peak, at its best, or at its lowest, or at its worst here. This is how I interpret it. Same thing with the New York market. Price was this high at one point and this low at one point. That means something. That lets me know, where does price want to go within these ranges? Does it want to drop lower than this? Does it want to just stay in this range? Does it want to go high? And again, because I know that these key levels are like magnets, they draw price to them. That's how price moves. I mark it. So I've marked Asian, I've marked New York, I've marked London. So now I'm interpreting the price movement. I see that price, looking at these candles going up and down, had this huge volume. I mean, these large candles mean large volume movements. So huge volume, but I noticed Asian market's kind of slow. And if you go online, you'll see a lot of people say they don't really trade Asian markets because it does have low volume, so it doesn't move as much. If you're expecting to make like 30,000 K or 10,000 K or even 2K with this volume, it's not that much. And you can see it's kind of short, a low style. Even one of these candles doesn't even have a full body, it's just a line, right? It's not that voluminous. And then you switch into London, and London kind of picks it up. London kind of gives you this bigger candles. But I also noticed that in the London session here, it has taken out the highest point of Asian market. And because I know this line is a magnet, it's going to reverse and come back and touch that line again. So I never get so caught up in the price. Oh, look, the price is going up from a key level. Give it a second. It's probably going to come back around. It just likes to hover around here at some point. Either it's going to pass it and then come back, or it's going to just kind of touch it and bounce around and go up. And like key levels will always be touched more than once, basically. So when it passes over this key level, what does it do? It drops right back down below that same key level, makes its very lowest point. And then in the pre-market, price starts to go right back up, passing this key level. So now this key level has been touched 1 time, 2 times, 3 times. And if we go over to our left, we can see that price has been here before. It's touched over here. It's crossed over here. Okay. So price goes up in the pre-market, and it's making these large candles. Now it takes out this London high. Like, wow, it took out a London high. That's important to know, because that means there's a lot of volume that's taken it past this line and has had it keep going, even to the point where it's taken out the previous day's price. The previous New York price was high over here. That was its highest point. And today, price is taking that and exceeded beyond that. But again, this is a key level. So you have to watch to see, will price want to come back and touch it one more time? And it does. This candle shows that price comes back down and touches it. This next candle shows it touches it again, but it's able to close up here. Then it shows that or close down here, then it shows it touches it again. It opens up here and ends up closing here before it finally says, okay, I'm done with that. Till next time, till tomorrow. Maybe we'll come back and revisit this line. Maybe we'll just keep going. Every time that price moves, it leaves evidence behind. One of its ways of you seeing evidence are these ticks, which I've mentioned before. It shows that price was once here, but it finally settled. Where it finally settles is where you see the full body of the candle. Where you see the lines or the ticks or the wicks, whatever you want to call it, is where price has been before. And to me, I look at it like when price has left its mark, it tells me I'm going to come back. I didn't forget about it. I'm going to be right back to see it. So if I'm on a higher, which they call higher time frame, is when you're looking at the candle in a bigger way, like on the 1 hour, on the 2 hour, the 4 hour, the daily. When I look at the candles on the 1 hour, I look to see where price has been before and left evidence of itself to see that it might come back again. So I see that price has been here before. It's left evidence here with this down candle, with this up candle as well. I honestly do not know what they're doing, but I'm so glad they're having fun. I like to make it a skinnier candle so I can differentiate. But when the candle touches a key level, or when it moves and it leaves a tick behind or a wick, I like to mark those. I find it important. So this is already marked, so I don't bother with it. I go lower. We're planning a Christmas get together, and I look for, when I draw these lines, looking for where price has previously left its mark to where it might want to come back. I'm also looking to make sure that a full body candle or a tick or a wick has not already touched this line. So like, for example, I wouldn't go to this here and draw this, because its candles already left evidence after that and after that. So these evidences here don't count. You want to leave your your markings where you last kind of saw it before any price has touched it. Because when you're looking at price action and when you're looking at taking trades, you're looking to see where price wants to be drawn to. Price is not going to be drawn back to an area where it's already been full-bodied. It's going to be drawn to an area where it's left evidence. If you're, depending on who you talk to or how you trade or where you trade, you'll hear things like high time frame draws on liquidity, low time frame draws on liquidity, which is exactly what I'm describing. You have, it's called a draw, like a magnet. Price is going to be pulled, it's going to be compelled to come back down and basically, hey, I was here before, let me come back, because these are kind of what we call key levels that attracts price to move. Price doesn't just go aimlessly to wherever it feels like going for the sake of going because it can go. No, it literally, it everything has a purpose. It moves and fills where it had been before. It will never just move aimlessly into the abyss for nothing. To us, it looks like nothing until you start to interpret candle movement, or you start to interpret that price is, it's dynamic and it's fractal, but it is drawn back to itself. It's a creature of habit. Yeah, that's what I'm trying to say. Price is a creature of habit. It doesn't just it's not risky. It doesn't just go wherever it feels like going. It'll always be drawn back to where it's been before, and you will always catch that. Let me look back and show you what I mean. So just looking at price action for the hourly, which has been terrible, but price went down here, right? And then why didn't it just keep going down? It could have, but it saw opportunity to show where it's been before and retrace back up and keep coming back down again and retrace back up and keeps coming down, but it's going to trace back up to where it had previously been. Here it had this huge significant drop and then found its way to trace back up. It had this drop again, kind of traced back up here, went down again, trace back up. So somewhere between here and here, it's either going to trace back up here, go as high as this before it comes down and traces back down. This is the movement of the market. This is how it goes. There is no, it's moving because it wants to. It's not possible. It's not just, oh gosh. It doesn't just move because it feels like it. There's a reason for it. So when I drew that arrow, or this chart or graph or whatever you want to call it of price, it moves down, it has to come back to grab that, whatever it left, to wherever it left its mark. It's going to come back and acknowledge it before it goes down. It's going to come back and acknowledge it before it goes down. It's going to come back and acknowledge its previous place before it goes down, and on and on. And that's exactly what you see happening here. It acknowledges where it was before it moves on to the next. And when it moves on to the next, it goes back and acknowledges where it was before that and moves on to the next, and on and on. So there's no I don't know what price wants to do. Yeah, you do. Price is going to move where it's been before. It's a creature of habit. It only goes where it's been before, and it leaves its own evidence so it knows how to get back. Just like people leave their markings on a tree or their footprints, or they leave articles of clothing on their body on the ground so that they know how to trace themselves back to where they've been. Super simple. So that's price movement in a nutshell. How price actually moves, why it moves that way, because it's drawn magnetically, and how we mark it out is by using key levels. There are a bunch of other key levels that I haven't drawn here, but I just wanted to use these significant ones to show you just that. Okay, and then now I'm going to show you basically how I take my trades.